Hi, my name is Kunal, and welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss the hottest upcoming industry trends and how their work is affecting the global economy. This morning from Singapore, we have a long-time venture capitalist who is the current head of venture and impact investing at Vulpes Investment Management. He serves on the board of Patamar Capital, the largest impact investment fund in Southeast Asia, and is the founding partner of Seed Myanmar. Please welcome Field Pickering. Field, thank you so much for joining us today.
Absolutely. It's a pleasure.
And how are things with you in light of COVID?
Yeah, things in Singapore are okay. It's obviously it's been an interesting year for everyone. For the last 6 months in Singapore, we've been sort of living in the new normal. So bars, restaurants, gyms, even movie theaters are open with reduced capacity, and everyone's wearing masks, obligated by the government to wear masks. So, and there are no cases anymore in the community. Anyone coming into the country, for the most part, has to do some sort of quarantine. So, yeah, all things considered, things in Singapore are not so bad.
Yeah, it looks like you guys really have it under control compared to many other countries out there. Let's jump into the first question here, shall we?
Sure.
Tell me about yourself and your background and how it led you to the path of being part of 3 different venture funds in Asia Pacific.
Yeah, well, all of the venture funds are under the Vulpes umbrella, and I guess my path to being part of the venture activity and being part of Vulpes and being in Singapore has taken somewhat of an unusual path. So, I went to law school. I worked as an M&A lawyer for just about 2 years, not long enough to have any real competency as a transactional lawyer, but with a law degree, people always assume that you should do the legal work when you're working in companies. And I left the practice of law and joined an Australian company that was putting together carbon offset projects around the world. And we were focusing on different markets in the U.S., state-based markets, and the company as a whole was looking at projects all over the world. And it was incredibly interesting work that we were doing, and it was really fascinating for me to get my first glimpse into international business. And I thought at the time that it would be an industry. It was very young. I thought it was an industry where I'd spend the rest of my career. Unfortunately, after a couple of years, the global carbon markets had a massive contraction, and the U.S. didn't sign up to this global framework. So the carbon industry disappeared in terms of good, growing, interesting jobs in the U.S. And that forced me to think about what I wanted to do next. And this is right after the financial crisis. So there were plenty of young former M&A people looking for what they were going to do next. And I just had the idea that Asia is probably the place to go. So I set out for Singapore, Hong Kong, and convinced my wife that I'd be able to find a job. And she said, well, find one and then we can go. And I spent some time talking to people, and then was given a job offer and convinced her that we should pack up and move from San Francisco to Singapore. And that we did. And that was about 11 years ago.
Wow, what a background and what a risk.
Yeah, I mean, at the time, we didn't have any children, and there was some risk, sure, but I think it was certainly a calculated risk and a risk worth taking. And if it had failed, then so what? I guess we would have gone back to San Francisco, but we certainly didn't intend to be in Singapore this long. I think we probably thought it was a 2-year adventure, something like that, and now it's proven to be. My career is very much linked to Southeast Asia, so we're here for a while.
And that being said, what is Vulpes's investment philosophy and ticket size?
Well, Vulpes is an investment manager and manages a number of different investment funds and manages funds across a number of asset classes. So I think the best way to describe it is it's an alternative investment group. So we have an agriculture investment group that invests in avocado orchards in New Zealand, and that group is the largest producer of avocados in New Zealand. the largest importer into Australia and a large importer in other Southeast Asian countries. We have a life sciences investment group that's investing in companies trying to cure some of the world's most complex diseases. Our largest position in that is actually the manufacturing partner for AstraZeneca, for the AstraZeneca vaccine in the UK, for the COVID vaccine. So we're very proud of that. And then we've done a bunch of kind of esoteric investments from four-star hotels in Africa to data centers in Myanmar. So our investment appetite is pretty diverse. We started doing some venture investing about 10 years ago, back when there wasn't much of a venture, or there wasn't a venture community really at all in Singapore or Southeast Asia. And backed a few of the early success stories in Singapore. And more recently, we have started managing third-party money to invest in venture capital, but we're doing early stage investment, and right now the ticket size for venture investing is around 500 to $1 million. So we're taking pieces, and we can talk about more, I think, about what we're focusing on right now during COVID. But the opportunities that we see in front of us are to participate in bridge rounds of companies that don't want to raise big rounds, but will offer terms to investors and historical terms, and we're writing smaller checks and moving quickly and investing alongside existing investors.
So is Southeast Asia the next epicenter of innovation and investment? I know you alluded to this a bit earlier in the conversation, but how is venture money currently flowing for cross-border VC funds trying to tap this market as well?
Yeah, well, I mean, Southeast Asia as an economy or as a region has 650 million people. Half of them are under the age of 30. Just about 90% of them have a mobile phone, a smartphone, essentially a smart computer in their pocket. I don't know what the statistics are, but only 20% of that group has a bank account. So everyone's using their phones for banking, entertainment, communication, education, doctor consultations, et cetera, et cetera. So the digital transformation in Southeast Asia is obviously explosive. I think investors realize that we've got massive populations in places like Indonesia, Vietnam, Philippines, Thailand, et cetera. And I think investors recognize that opportunity. Obviously, venture investing has been going on in the U.S. for some time, and in China, and in India is most recently been the recipient of a lot of venture investing, and venture investors have done quite well in India. So I think after those three markets, the next logical place is Southeast Asia, and we've seen some successes here recently. It's still I think it's still about 5 years old in terms of a real venture community in Southeast Asia. So I think you're going to see more and more interest from not only, so right now it's really regional investors, either investors that are located in the country or setting up funds in the country, or investors from Singapore, potentially Hong Kong, investing around the region. I think you're going to see a lot more investors globally start to take an interest in Southeast Asia. So I think the best years of Southeast Asia venture investing are still yet ahead of us.
Do you think this is going to be what the next valley is?
Yeah, I mean, there's lots of talk about Singapore being the next Silicon Valley. The government is certainly trying to encourage companies to come here. The big Silicon Valley companies like Google and Facebook, LinkedIn have their regional headquarters here. So you got these established players setting up offices here. There is a vibrant venture community here now, and the Singapore government's making it more attractive with special visas for entrepreneurs and things of that nature. So yeah, I think Singapore absolutely is positioning itself to be the Silicon Valley of Southeast Asia.
What are some of the most notable investments you've had till date?
Well, I think as a group, we're probably best known for, we were the first capital into a company called Property Guru. Property Guru now is the leading online property portal in Southeast Asia, and was close to doing a listing about a year ago in Australia for 1.25 billion. It ended up not getting listed. It was a couple of companies like it post WeWork in the month after WeWork that didn't find the markets as attractive as they wanted, so we didn't do it. And I think Property Guru probably will list in the future. And we were for a long time, we owned a big chunk of that company along with the two founders, and that's been one of Singapore's probably greatest startup successes. And again, we invested when there wasn't much venture activity, or really any venture activity, and so we're proud that we backed really one of the first Singapore unicorns. And it's been a great investment for us in terms of actually getting cash out of the business and still owning a piece of something that has real value and continues to create value for investors. So that's been terrific. If we look at what we're doing now, the Special Opportunities Fund. So we set up a fund at the beginning of COVID to invest in companies, growing companies that were facing a difficult funding environment. And we've invested in a couple of really exciting ones in Southeast Asia and in Australia and New Zealand. One of them is this company Sharesies, which is sort of the Robin Hood of Australia, New Zealand, or Asia Pacific. It's the only company that allows fractional ownership of shares. So people in New Zealand can buy shares in the New Zealand Stock Exchange, on 4 exchanges in the US, the New York Stock Exchange, NASDAQ included. And soon they'll be able to buy shares on the Australian Stock Exchange. And most exciting is the company Sharesies is going to launch in Australia and offer the platform to Australian investors. And then I think beyond that, they'll start moving up into Asia. And that's a really exciting company, led by 4 women. And the fundraise they just closed, they just announced they raised 25 million New Zealand dollars. And that was the fastest fundraise, announcing it or launching it to closing it that I've ever seen. And to do that during COVID is particularly exciting. So we're really excited to be part of that, and can't wait to see what Sharesies does next.
And since the pandemic has hit, right, a lot of VC funds have really focused on launching these secondary special situation funds to hedge their bets, to really ensure some part of their portfolios have fundamentally sound companies. And you chose to work on creating this COVID investment fund, which you just mentioned, with Property Guru founder Johnny, which has taken really this alternative investment or aggressive hedge fund style approach. At a high level, can you tell us more about this idea behind creating the Special Opportunities Fund, right? What caused you to see the potential in it during a time like this?
Yeah, so we'd started the year 2020 with plans to raise a large fund, typical venture fund for early stage companies in Southeast Asia. Typical, I mean, 8-year lifespan. People make an investment into the fund, and the fund makes investments, and we hope to start returning money at the end of the fund. So, and that's the typical timeline for a venture fund. We found that as we were fundraising in January and February, things were going very well for us. And then we got into March, and it became clear that COVID was going to be with us for a while. And it was too difficult to ask people to commit to a long-term fund when there was so much uncertainty. And we saw whipsaw days in global markets where stock markets were losing 1% to 2% a day, and then they were up the next day, and then they were down 1% to 2% the following day. So it didn't feel right asking investors to commit to a long-term early stage vehicle. So we were looking at the market. We're investors ourselves in a fund, and obviously involved in a number of other funds. We saw valuations coming off. We saw venture investors starting to panicking because a number of their portfolio companies were going to be decimated by either COVID or by restrictions on events or on travel. And we saw investors panicking about the loss in their portfolio, but also needing to focus on those companies that would do well, given the change in behavior. So the focus for venture investors was not to invest in new company or to make new investments, but was to focus on those companies in their portfolio that had a chance to survive. So that was the first part of COVID in terms of how venture investors reacted. The second part was how are venture investors going to come to grips with investing when they couldn't get on planes or can't get on planes to meet the founders face to face. Venture investors are very uncomfortable investing in a company without having met the founder. I mean, so much of this is about the founder. I don't know, 75% has got to be about the founder and the confidence you have in the founder or the founding team, and to not be able to, meet that person or team face to face, over the course of some time and over the course of a number of visits is really difficult. So our idea was there's still good companies, growing companies that are offering discounts and are facing a really difficult funding environment. So what if we go to investors and say, we're going to invest in companies. One of the things we're going to think about when we make an investment is, is there any hope of an exit within 3 years? So instead of the longer 8 to 10 year time horizon of a venture fund, does this company give us a chance of exiting in 3 years? And that's one of the things we're thinking about. We also said, let's be open to invest in various stages of a company. So typically venture funds have a mandate to invest into a series, into pre-series A or series A company. And it's pretty rigid in terms of what they can do for investing. But we said, our investors gave us the mandate to find real value in private markets. And so we've invested in pre-series A companies. We've done a series D bridge post series D. We also started investing in secondary. So company raising money, we invest into that round. Also go and buy at a discount, shares from investors that have been in there for a long time. Oftentimes individual investors, angel investors, who are happy to get a cash return, so that our overall blended investment gets a discounted price. So we've got some flexibility, and I think the pandemic gives investors kind of the opportunity to, if there's a way to help the company, to also find a way to help themselves and their investors. And again, we're looking for good growing companies that, unfortunately for them, are facing a difficult funding environment. So we're not looking for distress. We're not taking bets on what industries are going to recover fastest. No, we're just looking for good growing companies. And right now, terms are continue to be reasonable for investors. This fund is looking for the theme is looking for good growing private companies. So we'll use a number of mechanisms. We'll invest directly into a round as equity. Oftentimes we're investing in a convertible round that will convert at a discount to the next round. And sometimes we're investing in bridge rounds, which are just essentially an extension of the last time they raised money. And sometimes those bridges are equity and sometimes they're convertibles. So we're the mechanism, or the instrument isn't all that important to us. What's important to us is, one, obviously good growing company with a good founder or founding team, and then and what we think is either value as a result of COVID providing better terms for investors, or a company that is just taken off as a result of COVID and a change in behavior, and that's going to give these companies real opportunities to grow. So it doesn't. We're not looking for a particular instrument in terms of whether it's equity or convertible or a bridge. We're more looking for good companies. We're actively pursuing good companies, and then after conversations with those companies, we figure out what's available in terms of their funding needs and what makes the most sense.
And as you kind of alluded to earlier in this call, when this pandemic hit, right, where does your confidence come from in backing founders which you cannot have face-to-face meetings with anymore? In other words, how has your investing style changed?
Yeah, well, I mean, it's we've had to get really good at a process, and we've done that. So we have a process for going out and what in terms of how we access deal flow is we look for certain themes, or we get interested in certain geographies, and we've got a team that goes out and finds, let's say it's last mile logistics companies in Vietnam, right? And we'll put together a list of who the top 10 players are. One of the requirements for us is the company has to have raised venture money in the past. So we're not looking for companies that have only raised angel money. And so they have to have some venture backing. So that's kind of the first hurdle. So we'll if we're use the example of last mile delivery companies in Vietnam, we'll look at put a list together, 10 or 12 companies that have raised venture money in or around this space. Look where they are now, and some of them are funded so well and valued so high that we don't think we can get much value, but somewhere in our sweet spot, which is around Series A and Series B. And we'll do our work around a company. We'll reach out to the company, introduce ourselves, have a conversation, get to know them, and then say, where are you in your funding? And oftentimes that creates the opportunity. So that's the way that we're out actively going out and looking for deal flow.
So with the COVID-19 Special Opportunities Fund, which you're currently investing through, what major trends are you currently seeing in the startup space?
Yeah, I mean, I think it's the obvious. Anything digital, anything transacting or living your life through digital means is, it was already happening as a result of technology and the power of phones in our pocket and other devices, and only transformed with COVID because people are doing more things kind of frictionlessly or remote. So just about everything that we're investing in companies that provide a service that you access through a digital platform. So I don't think that's anything new, but it's just it's a continuation, and it's companies, business models that were growing pre-COVID and have exploded exponentially as a result of this change in behavior. So there's nothing new. It's just really accelerated the growth of business models that were starting to work or were working before COVID.
So currently your portfolio is 27% female-led and 73% male-led. How do you kind of see that changing over the course of the next few years? Are you guys really trying to focus on this aspect of, hey, we need to invest in more female-backed founders?
I think it's more that we're proud of the fact that that we get to work with really good female founders. So I mean, we're looking for good founders or good founding teams and good companies, right? And of course, some are going to be run by women, some are going to be run by men. So I think it's more we're proud to back good female founders. We're not we don't make investment decisions really based on whether they aren't. We're kind of, I guess, gender neutral in terms of investing, but proud to back female founders. I think the industry average is 4% of a portfolio, and we're at 27%, and I'm sure that will continue to grow. So it's something we're proud of. But I think what's more important is finding a good founder, and that good founder, maybe female, maybe male. But so that's kind of the extent of it. But there are more and more really good female founders in Southeast Asia, Australia, New Zealand. So it's great to see, and we're always really excited when we get the opportunity to work with one.
And to wrap up our call with our last question for today, what piece of advice would you give to people out there from the journey you've had so far in life?
Yeah, I think there's no straight line. So if for somebody who's like just starting their career, thinks they want to do one thing, that they may change, they may pivot, you may get some experience and figure out that either that's not what you love doing, or it may give you an idea about something else. But I think there's no straight line, and there's no time frame. You can come of age late, you can blossom late, but I think stay learning, continue to do things that are interesting to you, and ultimately you'll find your niche, and when you find your niche, it's much easier to get up in the morning and be productive because you really like what you're doing. So and also take a little bit of risk to help yourself get to that point and find what it is that excites you and motivates you and can make you productive.
And for people who are interested in contacting you or potentially catching up for a cup of coffee with you, what would be the best place to reach you at?
Yeah, I'm always happy to chat. I think ping me on LinkedIn. That's probably the easiest.
Field, it was a pleasure having you on Geeks of the Valley, and thank you so much for joining us today.
Absolutely. Thanks for having me.